Hey guys, Adam Rose, Vice President and Senior Loan Officer for Western Ohio Mortgage here in Sydney, Ohio. Today is another Mortgage Guy podcast episode, and we are going to talk about the housing market, what it's going to take to unlock and unleash all these buyers, what's going on with rates a little bit. They're acting a little funny, and insurance. We're going to talk about that a little bit again. It's really not anything in particular about insurance, but kind of what's going on in the market and there's been a little bit of a spotlight, mainly because we've just had 2 hurricanes in 2 weeks in Florida. It's causing some problems. So let's talk market. Okay, coffee, good. Okay, so rate cuts, right? We've had them. They went down. They go back up. They go down. They go back up. What's going on? So October is going to be a little rough, all right? It's going to be a little bruisey. The average rate went down to 6.11 or 6.09. It's playing around with 6.11 on average for about a week here in September. Again, when I do these are like Freddie Mac numbers, very generic, so I'm not disclosing any specific rates about a specific customer or doing APR. But 6.11 was the low rate on average for conventional land, Freddie Mac, back in September, and it's now about 6.62 as of just the other day. Okay? So, why the change? We have a rate drop. Everything went well. Everybody reacted pretty decent to it. This past Friday, or about a week ago, the jobs numbers came out, and nobody was a fan of the jobs numbers because the jobs numbers look a lot better than what they were supposed to look. And due to the jobs numbers, we went whoop, right back up. Okay, so there was a lot of pressure on bonds. So again, mortgage-backed securities, right, follows the 10-year Treasury. If you're just looking at investments, watch the 10-year Treasury. As yields go up a little bit, so do the mortgage-backed securities, right? So our interest rate's going to move with it. So we've just seen it's going to be a little bit of a bumpy ride. Anything that happens, natural disasters happen, stuff that's going on overseas, any announcements of money's going out, more war talk, it creates issues in our market because, again, like I've said before, we're all built on speculation and we react to words. Regardless, right? And then whatever happens, the actions that happen next might create, or we might react positively to it or negatively to it, just depending on what happens. So the rate's all over the place. Why I'm bringing this up is, you always see the news on, hey, mortgage cuts, rate cuts. Mortgage rates are the lowest they've been in 18 months. That's awesome news. What you don't see advertised is when they go back up. So we're constantly setting this new water line. And people think they're at 5.5 or 6, whatever they think it's at. But they constantly move, and very, very rarely do you see headlines showing market rates are back up because they want speculation to be good. They want consumer confidence, so they're not going to tell you if things go sideways on them right after they do a rate cut. So FYI. Anyways, so there was a survey done by John Burns Research and Consulting, a.k.a. JBREC, and they said they believe, after doing a very, very large survey across the country, that the magic number for the magic mortgage rate is going to be 5.5 or less in order to unlock the market and boost resale turnover. So, with that comment, I would like people to comment in general, business owners, salespeople, realtors, just property owners, okay? What do you think the magic number is? So, because again, this is all based off of a survey, but this might be stuff out in California, New York, all over the place, right? We don't know where their rates are sitting. We don't know what their market values are. It's all different based off the market. So what do you feel that number would be if you own a home currently and it's worth a decent amount and you can make some money on the sale, but you haven't come off of it because specifically mortgage rates, right? Not everybody's that way. Some people are, if I find a home that suits me better, I'm going after it regardless of the rate. Some people are more financially conscious about it and saying it doesn't matter what I find. I'm worried about my pocketbook. This is the number I have to come off my house. What's that number? Comment below. All right. Okay, guys, so let's cut over to some insurance stuff and what's going on because we've had 2 hurricanes recently, Helene and Milton, causing a lot of damage down in Florida and other places, of course. In the Carolinas, very heavy damage from Helene because of the floods. But, there's only a tiny portion of Americans that actually have flood insurance. Yet their insurance bills, they're already soaring, right? Not even related to the flood insurance that's going on down there in the South. Most of the insurance that's available down in Florida has become backed by FEMA only. It's NFIP flood insurance backed by the federal government, of which is millions and millions of dollars in debt. Actually, I take that back. It's more than $20 billion in debt before the hurricanes even hit. And that's why there's a lot of private flood insurance available, not in Florida. That's key, okay? So since it's a hurricane area, you're not going to be able to get private, right? I mean, we already got FEMA, and you've got the NFIP-backed flood insurance programs down there that are $20 billion in debt. How do you expect a private flood insurance company to come in there and try to fill that void? It's not going to happen. The government doesn't expect it to happen. So what's the answer is the question. Well, there really isn't one, okay? So they're coming up with there's a lot of mitigation issues that the state backs to help rebuild. Their disaster loans, basically, is what they're called, to help people get back on their feet, because we've seen that FEMA hasn't been overly effective recently. That's very, very unfortunate. But anyways, why I'm even bringing this up, insurance in general has been a complete nightmare to deal with. There's been a lot of insurance companies over the last few years that went through a lot of losses, very large insurers. And so you've seen rate increases since really COVID, right? But it's not just because of losses. So let's kind of rewind the tape, considering the fact that insurance rates have, I'm not going to say doubled, they were damn close, but on average have went up about 60% since 2019. And in some cases have doubled on some people's homes and properties due to claims. So COVID hits, right? So in 2019, before all this stuff happened, it was very common. I could, not to shout out to a specific company that has a mascot named Jake, but I could say if I sent a client over that way, or they already had their insurance with Jake, and they said, I'm going to get my insurance quote from over here, I could almost guess exactly what the quote would be. $67. Almost like clockwork. It didn't even matter what the loan amount was. $67. That was like the magic number. And today, and I'm not talking about the same company, but in general, it's very uncommon for us to see anything below $100 a month. Very uncommon. Most of the time, they're between $115 and $140 a month. Okay, so the cost of insurance has gotten ridiculous, and it's not the insurance agent's fault, right? I mean, in the insurers, they've incurred losses, and there's a lot of stuff going on. So let's dig into that a little bit. So what happened during COVID? First thing that happened was a supply chain issue, right? So we had to shut down, created a massive supply chain issue because the ports were closed and what have you. It caused a lot of problems. So when supply chains issues happen, right, the supply drops, the demand has stayed the same, but in some cases when supply issues happen, demand goes up because people are scared to death. That's why you saw no toilet paper at Walmart, right? Same concept. So once you get behind, America is a well-oiled machine, okay? We are constantly consuming goods. And so that supply chain cannot be disrupted. If it's disrupted for a single week, massive problems. Now, I want you to think about that. Everything that you do, okay? Gas, groceries, you name it, all right? What I'm going after here is building supplies, okay? Massive disruption because Canada is one of the largest suppliers of lumber to the U.S., and they weren't just off for a week or two. I mean, we had months of issues trying to get imports from Canada when it came to lumber. So the cost for our supply, right, our building supplies, went up dramatically on the lumber side. I think everybody can look back, contractors that might be watching this and friends that you've done projects, it doesn't matter. If you look back about 4.5 years, you remember when OSB was like $10 and it went to 60. And now it's still expensive. It hasn't really corrected itself. It's gone down some, but it got absurd, right? So when that happened, the cost to rebuild a home went up dramatically, okay? Replacement costs. Labor cost shortages, right? Labor costs went up because of shortages in skilled labor. And the time to do these things. Everybody got behind because they were waiting on supplies to do their current projects. So if you called a contractor, they went out 8 weeks, 12 weeks, 6 months. I mean, furniture got absurd. It was very uncommon to see anything less than 5 months turn time. Everything came from the Carolinas that they built. So that caused a lot of problems, right? So naturally, the cost to rebuild these homes, insurance went up, right? Because if you had a $300,000 house on the replacement cost with lumber tripled, right, your rebuild cost might have went to $380. So insurance went up. The other piece of that, inflation plays a slight role, okay? So we'll get there. But the values got really crazy, didn't they? Your home was worth $100,000 pre-COVID. Now it's worth, 190, 200,000. I mean, home prices went nuts. So now the dwelling cost to cover your home went up as well. So when you mix all this stuff together, insurance naturally went up. Now, why I'm talking about it now is mainly because it's getting a little bit more out of control still. And a lot of the insurance companies that have incurred some losses, specifically in the Carolinas, because a lot of the people were not in a flood zone when they got flooded out and their homes are destroyed. So a lot of insurance companies are taking massive losses, okay? But I'm talking about it now because insurance in general, we're going to see go up a little bit more, I believe. If your policy was $100 a month, I would expect maybe $110 to $120 a month when it renews next year, but I don't have a crystal ball, and I'm not trying to scare people about their insurance, but it's just information. But why this is relevant is I'm looking at a graph right now, and so 2019 and earlier, insurance or flood insurance made up, on average, anywhere from 7 to 7.5% of the actual mortgage payment. Okay. Now we know that mortgage payments have went up pretty significantly, right, over the last couple of years because rates have went up. But this is going to be information around 2020 to 2022 when rates were crazy low. The percentage share of the insurance cost versus your mortgage payment has went from about 7.5%, knocking on 8.5% of your mortgage payment. Okay? So even though costs went up, even though home prices went up, a lot of people's home payments during 2020 and 2021 have kind of went down slightly because of the crazy low rates, right? So we got a slight decrease in the mortgage payments because of the decrease in the rates, but the percentage of the insurance versus your mortgage payment went up, which is an indicator that insurance is getting a little out of control because it should constantly be proportionate, right? If it traditionally is about 7 to 7.5% of your mortgage payment for the last 15 years, even when prices go up and mortgage payments go up, it should still stay at 7 to 7.5%, which would still indicate it's going up, but it's going up exponentially because the increase of 1.5 to a point in regards to the share it has of your mortgage payment has gone up. So insurance is causing a bit of a problem, okay? We already are dealing with higher rates right now. We're already dealing with property taxes exponentially increasing every couple of years. The last thing we need is insurance, and these natural disasters are going to cause a little bit more of a problem even for people that are not affected specifically in those zones. The Florida market is going to face a lot of challenges over the next couple of years. I can't see private insurers even being there anymore for just homeowners insurance. We're not talking about hurricane insurance, which comes in two parts, and that's flood and wind. I think it's going to be state backed, NFIP backed, and there's going to be disaster funds specifically for it just to insure their homes. It's a sad thing, but it's going to have a massive impact on the housing market, I think, across the country. And I know it might be a minor impact to some, but it's going to be a major impact to others. I mean, if you have a house payment change of $25 to $30 a month, that may not seem like a big deal to most. But when you annualize that, and it's specifically just for your insurance, that's going to have quite an impact on families, right? If you're going to spend an extra $250 to $400 a year just on insurance, and we're already dealing with inflationary measures and everything else, I mean, it's going to be quite a challenge. So, guys, if you've closed on a house in the last couple of years and your rates in that upper sixes and the sevens range, we're going to have this new insurance is renewing and insurance premiums are going to go up. We need to look at doing that refi once we get into those fives consistently into the fives. I'm not saying you can't get it now because you can. It's going to cost a little bit in regards to points, but you can do it. But getting that house payment down might offset any future increases that you're going to be seeing. Okay, so take a look at that. It might be worth your time. But that's all I got. A lot of information, a lot about insurance. May or may not be relevant to you, but I think it's something to talk about, and hope all of our thoughts and prayers are out there to all the victims of the hurricanes over the last 2 weeks, especially a gentleman that works for us. That crazy bastard never left his home when Milton came. He lives in Cape Coral. His home's fine. His family's fine. So good looking out there. Guys, that's all I got for you this week. Make sure you tune in next week and subscribe to our YouTube channel. Check us out on Apple Podcasts and Spotify, and we'll catch you all next week.